All right, good night, everybody. Make sure your mics are mute and make sure you have your hand pad because these 2 days, the day and the morrow to tomorrow, Thursday, is going to be very important because we deal with financial statements. And it's so important that you understand these because when you are dealing with a lender,
Mute my mic.
Denver, anyhow, I'll mute it for you. Okay, so these next 2 to 3 days is going to be focused on financial statements and financial funding. Show me the money. This is the money part of the 8 amps. And we're going to look at that. Now, in your financial plan, in your business plan, what the lender would want to see is the purpose of this proposal and how much money you want. It could be grant funding, investment, anything else, but the lender wants to know how much money. And also the vendor wants you to identify where the use of the funds will be. So in this section here, don't forget to put what it is. And of course, what the amount is. So 2 things got to be taking place. What the amount is and what it's used for. So you all should start getting it together now. And of course, you need to have a backup plan. You need invoices. So it's so important that you have invoices, which add up here. So the tabulations, you have 6 or 7 or 8 things here, but they have to add up. All right. Now, if you seek grant funding, there would not be no repayment plan. But if you're seeking some type of loans, it'll be a repayment plan, okay? And the repayment plan could be 3 years, 1 year, 5 years. All depends on if you're getting a loan. The grant is only normally up to $5,000 max. Nobody give you more than that. You may have a $40,000 plan. So you need to seek, and don't let cheapness scare you away from a lot of money. If your business plan indicate that you have you need a need for $40,000, you can get a cocktail of that. See if you get like some grant, a loan, and see if you can get some equity financing. I could discuss all of that with you because you get a loan, a grant, or equity financing, depending on what you want, especially Canada. Ms. Gibson, she would need a grant from an international agency. So on those donor agencies, so your grant will be a little more than a lot of people because you'll be strictly grant funding you would want. So I will help you with that. Okay.
You could go back to the top, please. I was taking some notes from the top.
Go to what?
You go back to the top. I was taking some notes from the top.
Oh no, you don't need that because I'm going to email you this and all that stuff. So you're just request. You have that. You have to go back to the top. And all this is your business plan template. This is the bottom part of it. So you don't have to need to go back to the top. Yeah. Now the financial statements, I'm going to go in great depth with financial statements tonight. In your template, the back of it, you'll have a pro forma income statement. And a pro forma income statement only means that it's for the future. Year 1, year 2, year 3. I normally in a business-oriented type of organization, you'll have revenues first. Revenue here, revenue here. And this revenue could be ice cream, food, whatever. I'll explain nonprofits later on, one-on-one. Because you have what I call contributions, donations for this part of it. So can't even have donations, contribution, grant, all that stuff. So it's a different story. The cost of goods services means how much you make, how much you buy in order to make something. I'm going to give you realistic examples. So you will put in here inventory purchases, raw material purchases, or some type of purchases. Because in order to make let's say of ice cream sales. So you'll say coons, the ice cream itself, and some type of equipment that will help you sell the ice cream. You see? And this comes to so your total cost is 5,000. All right, and then your gross profit is revenue minus which is $5,000. So your revenue is 10,000. There's a reason why I kept this blank and doing this now. People is learning better when you do things on the fly. Okay, and this we're saying here 50, so 5,000. So you have your gross profit is over 50%. So it's revenue minus cost of goods sold equals gross profit. You see? So what you want to do is keep it in order of importance. So you put $3,000 here. You put ice cream here. And are those just performer? That means you guessing, but you have a good idea based on your cost, how much you think you should make. So you say, you know something, I price in my product to make 50%. So if I buy something for $100 or some of that, I'm going to sell it for $150. So I get 50% per item now. So that means here, you can just go to 15,000 and this could go to 20,000. This could go a level. So you always want 50%. So whatever 50% is, you'll do it here. If you raise just 50%, you have to raise this 50%. All right, before time, that should explain that. And then all this right here, all the salaries. Don't forget now, write this down. The cost of goods sold is only what you spend to make the revenue. Nothing else. What it costs. There's a big difference between purchasing and expenses. And of course, you could put 150,000 here, and 15,000 and 20,000. Or you could say, hey, I can make $20,000, then I make $30,000, because I'll be expanding big time. Because but your market got to show that you're doing it. And of course, all your manager salaries and support salaries, everything got to come down here. All it's got to
Excuse me. Hi. Mr. Turnquest, I have a
Yes.
question. With the section where it says, could you scroll up where it says cost of goods? Could you scroll back up, please? So cost of goods and services sold is the ice cream, the cones, and the equipment. Ain't no number go in the box where that is on top above the 3,000. No, the total don't go there.
Nope.
Okay.
All right. And if you're in the service business, this could be air conditioning parts, the air conditioner itself you're selling, and some type of other parts you're selling along the installation. All right.
Okay.
So all this could come to about, let's say, 2,500. And that means this is actually 25% of your total sales of $10,000, and your net profit is 2,500. Just for the year now.
You said operating expense would be 20% of what now?
25% of your total sales.
Okay.
So you divide 2,500 into 10,000. Right here. Okay. And then you divide 2,500 into 10,000. So you have 25% here, 25% here. I only did these numbers to make it easy for to tally up. You'd be good if you get 25% profit margin at the end of the day. Either high or middle or low. So you'll have most likely but a 10% or 20%, the most. It wouldn't go too much high. All depends on depends on your product. So what that means, all of these right here. Now these, of course, these numbers be higher. I only do it for simplicity. I mean, everything here, all the money, salaries, everything. And in business, make a note of this. You're supposed to have all of these in business. Depreciation is just a reduction of your asset. All I mean, if I buy equipment for $10,000 or $12,000 every year, I can reduce that 1,000 or two, because after the third year it's useless. So zero. So for homework, I want you all to Google depreciation for me and find out what that means. All it is reduction of your assets. It's like buying a car and come with the yard, it weighs 20% less of the parking lot. All right. So that's a pro forma income statement. From there, you go to your cash flow. I mean, well, let me go to balance sheet first. And all this balance sheet means, right? So let me go back to the income statement. There are 5 categories of income statement: revenue, cost of goods sold, gross profit, expenses, net profit or net loss. I'm going to explain that to you in a detail later on. I'll just go and what I call highlight it more in another presentation. So what you're supposed to be doing for homework for me for Thursday, because I'm going to have an open mic on Thursday for everybody, so everybody can ask questions. Your homework must be getting this model together for me between now and Thursday. If you need to ask more questions, you need to put in a group for me this week, because I want you to put numbers in all of these, all of these, all of these. So straight down. You know how much salaries you can make, right? You know how much support staff you have it. Utilities, things like bank service charges, certain things you don't understand to put in, like depreciation and bank service charges. When I look at your model, I can always make an adjustment to it. Don't hit your head.
Excuse me, Mr. Conquest.
Even when you're getting a loan, I can put the loan information here also to you. So
Excuse me, sir.
yes.
What if I ain't putting, I don't have to put all of this on my business plan, right? Like all these things. If I ain't have all this.
No, you don't have to.
Okay.
If you have bank loan payments, so when it comes to loan, and you have to have a bank loan payment, I will work it out for you. Because right here, I'll put here, you're getting a $10,000 loan. At 10% for 5 years.
Yeah, excuse me, sir. Wouldn't the operating costs also decrease after a period of time after you learn how to run the business more effectively?
One
as
second,
opposed to
please.
expenses?
Let me finish my work. 1 second. Go ahead.
Yeah, I was saying, wouldn't the operating costs decrease after a period of years after you learn how to operate the business
Nope.
effectively? Efficiently?
Operating costs will go up. But what happened is that your sales will go up also.
That's
Your
what I mean.
sales should go up higher than your operating costs. So your
You know
profit,
how to manage.
no,
Profit
no,
go up.
no. Sometimes your operating costs, sometimes it might go down, but don't depend on it going down. But your efficiency, which means your output, would be much more than your input. You may still go up, but your profit margin will go up significantly more than your operations. In other words, you may say, boy, I only 10% efficient now. That means I get that much, residential or residual income, or in reference to the operating costs or whatever. But next year, I'll make sure I go up to 15% efficiency. Then I'll go to 20% efficiency, right? It's like utilizing certain utilities, like, putting in, it may cost you about X amount of putting in these lights and all of these, these high efficiency lights, but your bill will be reducing over time. But you'll be spending more, but eventually it'll become less. But so you'll find out that your operation costs right here and expenses may go up to $3,000 or $4,000, $5,000, but your revenue will be going up much more higher than your cost and expenses. Is it? Because basically your financial statement model is basically, is write this down for me, please. Revenue minus cost, total cost of sales equal gross profit. Revenue minus total cost of sales equals your gross profit.
One question mark, please. Under operating expenses, what would I, for bank service charges, you could define that for me? Break that
No,
down.
no, no, yeah, like I said, I said things, make it, write this down for me, please.
Okay.
Bank service charges,
Mhm.
depreciation, I will have to put that in for you. Because
Okay.
normally the bank service charge, it all depends what type of banking service you're using. And
Uh-huh.
of course, how much checks you're writing and how much transfer you're getting. And
Okay.
it could be $40 this year, maybe $60 next year. But it's a hypothetical information you put in there.
Yes,
But
sir.
normally should be no more about $50 a month. And you should be doing a lot of transactions. I look at it based on your sales projections.
Yeah, do that.
Now, please don't disturb me whilst I get this model together. Revenue, this is the income statement equation. Income statement is 5 categories. Revenue minus cost of sales equal gross profit. Gross profit minus expenses equals net profit. I'm going to show you a PowerPoint presentation soon on how to look at that. The next financial statement is your balance sheet. Your balance sheet is basically a snapshot of your financial position. It's divided into 3 categories. Your assets is what you own. Your liabilities is what you owe. And your equity, which is your assets minus your liabilities, equal equity. Now, So you got to write down exactly what you're coming up in the game. So what you coming up here and I say, hey, what I bring to the table? Am I bringing cash, inventory, or I bringing some type of deposits I made already? If I bring in line, building equipment to the game. So what are you doing? On your liabilities, the current payables, say if you have any current amount of money you owe, you may not have none if you're starting a business. But if you get a loan, you gotta say exactly what the loan is and all that stuff. You wouldn't have the real property tax or whatever. I just put that there in case you use is a big business. So basically, a small business, you may only bringing in $1,000 cash. No inventory, nothing. Boom. That's it. So your current asset is $1,000. So your current assets are monies that it could turn into cash quickly. All right, or or you have cash related, like inventory and stationery or whatever. That's, you know, your long-term assets is normally fixed assets. You can't move them or move them easily, like your land, your building, your furniture, and your fixtures, and your infrastructure development. Infrastructure development, you'll find out when you start to grow. Like when I moved into my business on Robinson Road, it was just one blank 4 walls. I had to put in shelves. I had to do all kind of stuff. But petitions, and normally with infrastructure development, you can't take it. You gotta leave that right there. If you put $5,000 in the renter's place, they'll ask you to break it down. Right? If you won't break it down, it's okay. I'll leave it. I'll probably rent it somebody who have the same type of equipment and stuff. So infrastructure development is the money you use to fix up the place. Okay? Petitions and stuff like that. Everybody know what land, building, all kind of stuff is. Just to use 5,000 here. Equipment 2,000. Another thing, just say you pay rent and all security deposit and all kind of marketing. You can use that as an asset too, because they prepay it. They say come to 3,500. You paid all this money in advance. You don't build a land and you don't build a building. You're renting. Infrastructure development. If you spend about $2,000 putting in all these patios and all these funny things you need to put in shelves and partitions, the part of your office and all kind of stuff. So you come right here. So that's 2, 5, 7, 9,000. Take that. Musician. Check what's the musician. 5, 6, 7. That's 9,000. And it's beginning now. When you coming in the game, eh? So here it is now. My current assets, which is, of course, cash or cash related, and my long-term assets. You remember, see with the net depreciation? Because all this stuff is depreciate except your land. And if you miss it, and you have a land near a dump, that may go down. So land will never go down like that. So not like that. But buildings start cracking up and it's all kind of freaky stuff. So the only thing up is your land will be going up. So it is I own the land. So that's the renter land, and that's the landlord building. So I come in with $4,000. So it's 4 plus 9 is 13. So my total assets is 13,000. Notice that your balance sheet income statement, you see it's behaving dollar. You don't gotta put no dollar sign to this because they already say that it's dollar. And you put grand here, that could be without loan or whatever. So you can say, well, hey, or you can say with loan or whatever. So you, whatever, all depends what you come in with. So this is without everything else. I come in with $13,000. All right, so I come in with $13,000. I have no accounts payable. I owe nobody. I know the landlord owe me because they owe me first and last month rent. So 0. If I get in a grant, I have the loan principal. So therefore, I ain't getting no money yet. So I come in with 0 money for loans. So I don't want nobody say I owe him nothing. So I have no loan principal outstanding. I have no property tax outstanding. So my total loan is 0. My total liabilities is 0. Write down this equation. Assets minus liabilities equal equity. See that? Now, it's just a accounting principle that total liabilities and total equity come 13,000. So at 4,000 plus 9 is 13. Now, always remember this now. Write down this equation for me, please. Total assets equals to total liabilities and owner's equity. Okay. All right. So I want you all to now go home tonight and start putting this information in between now and I don't mind if you're off. All I want to you that you attempt to put this information in. I haven't finished the presentation yet. I said 15 more minutes, but I want to remind you to please, whatever you do, attempt to put this in. You should not have too much information in because normally you start no, right? But based on the balance sheet, you can't put junk in. So you need to find out in your business how much you're paying the staff, how much paying you. Remember, marketing is not an expense. Marketing is a investment. The telephone bills. Notice I have telephone separate than utilities. Normally in business, telephone is separate, but you can tie in electricity and water, but make telephone separately. Security protection, self-responded. The service charge, I'll deal with that for you. You can put anything there, put $20 in it. Everybody put $30 a month in service charge. Employee training, that's how much you, now your NIB is always 5.9% for the business. So every time if a manager making $10,000, the business is supposed to pay 5.9% for that manager. An employee supposed to pay 3.9. So this is the expense version. This is the 5.9% here. So every time you hire somebody, you'll pay 5.9% of their salary every month. Now you're working by yourself, it's a different story. License and permits, any special permits, but the business license is free. Okay, business licenses are free. So anytime special permits you have. Professional fees is like if you come to me for some advisory services, these are lawyers, accountants, and all that stuff. So supplies and stationery is self-explanatory. Of course, maintenance and repair, painting and all kind of fixing up stuff, eh? Depreciation, it all depends on your assets and everything like that. All right, so that of course, if you don't get a loan payment, so you'll find out how much. I'll help you this section here. If you don't get no loan, you're gonna put nothing here. Okay, and this is the interest. I have a interest table. Bradway will tell you that automation table that will tell you exactly how much you'll be paying every month. I flipped through my spreadsheet and it tells you how much you pay within 4, 5, or 2 years. Depreciation is based on the value of your assets. And we'll come up with a fixed asset. The banks and the lender would not mind you putting a figure there, which is maybe low or something like that. But it's a guesswork here. And when you get more involved, you'll find out. But you got to put depreciation because things disappear every month. It's break down. Even your bodies break down. All right. So this is what I want you to do. Now, on the Has anybody see this financial statements customized manual on your screen?
Yes.
Yes.
Hi.
Yes, yes.
Yeah, so
Yes.
I'm gonna conclude tonight with a real life scenario of this financial statements. This is how the income statement look. This is how yours would look. Year one, year two, just like this. You have your revenue, the cost of goods and services sold, the inventory, or if you are a service, you'll say material or something like that. And of course, you say labor. Because if you look at a service, labor is a cost of goods sold or cost of service. You don't put a technician or air conditioning guy down here. You put them up here. All right, so you'll have here inventory costs, your cost of goods sold here, and that's right here. When you get a certain level, I will send you an Excel, so you can start putting your information in the Excel model, and it automatically tabule up things. So it automatically add up everything. So once you put this here, I put this here, it automatically say gross profit is this. So automatically, I'll put right here, I'll put a formula right here. So automatically will take down everything else. Of course, your salaries and everything. So you raise it every month. Depending if you are paying yourself more or your staff more, whatever. I always like 3 years. It gives a good image of where you need to go. Marketing, rent. So, and this is yearly now. So if your rent is $2,000 a month, that means you'll be paying 12 months, which is $24,000. Okay, come down here. Telephone, everything. Professional fees, that's your accountant. Loan interest. Says this person paying $3,000 plus a month. So she got she got a big loan. See that? Appreciation. When it's a depreciation normally be fixed. Every year I say I'll just take a $200. Because at the end of the day, I need to replace that. So that got to be expensive off because now I come back tomorrow. Yeah, throw it away. Now, with miscellaneous, try not to have a big miscellaneous. This can never be $10,000 miscellaneous. Because what you want to do is try to categorize all of your expenses. And once you categorize all your expenses, right, you will always have it straight down the road here. And the miscellaneous will just be a small amount. Your profits should go up every year. But if it go down every year, that means you got to get out of the business fast because you're draining blood, right? So, like I said, that's when you know about your budget. You should know, hey, mind you, all I this income statement, balance sheet, and everything, cash flow is just I just doing this as a model. Of course, you might not need all of this stuff, but I want you to open your eyes if that there's a tendency that you might need it. A big problem is B, where the business person do not know at all what they need in business. So I give you a good model because every business should have over 20 type of expenses to cover certain things. You see the five categories. One, two. The five categories right here.
Yeah.
So she indicated that gross costs are monies you spend to create sales, inventory, material, and direct labor, and expenses. This person really don't call me tonight, boy. I don't know around this person. Damn. I gotta cut this phone off. I see it's a 6,000 calls. I don't know what this is, wait. Okay, so I ain't getting that. All right, so the balance sheet. That mean maybe the prime minister's trying to call me. This phone keep it ringing. I should put a pillow over this. Oh man, one second. Oh, boy. All right, so assets is what you own. Remember the current assets, fixed assets. Liabilities is what you owe. Okay, so you have here, there's three categories in a balance sheet: assets, liabilities, and equity. All right, so the balance sheet shows the net worth in a business. Okay.
Good night.
A snapshot of the business financial position. Now, finally, do what you have with this one here. This is the cash flow statement. I'm leaving it last so you can understand that this is the most important statement, but it comes from the income statement. And I'll help you over this. I don't want you to be bothered too much with this at all.
I feel like an hungry boy. God, dear Lord, boy.
So I will take the information from the income statement and put it in the model and work on this, and then it comes out easily based on my model. Because the pre-start is the loan you're getting, either what you're putting in
Yeah,
or what you get from the bank or whatever. Pre-start, $10,000, whatever, or any type of payment account coming in, whatever. And the startup cash and all that stuff from inventory and what you pay. This is the pre-start is normally the amount of money you spend come in and what you get going out. So make it know the pre-start is the money you originally get coming in your business. And originally the money you get out. So that means by the third month, you might spend up all this money, which you get coming. Hopefully you have some money left over for like 6 months working capital. So when a person got the money in, she is left with $21,000 for 6 months. So when she started off her operations, she had $21,000 in cash in the bank. Now with a cash flow statement, there's cash now. You can't lie on cash. Either cash in the drawer, cash in the bank, cash in a debit card, not credit card, because you owe the bank. The cash is cash. So you have cash in a bank or don't put it on your bed now. So you gotta have cash in the bank, on hand, or debit card. She had $21,000 left after she spent buying inventory, all that. This 21,000 could be used for all kind of stuff, you see? All kind of stuff. For salaries, 6 months, and all kind of stuff. All right, year one. She had just sales and all kind of stuff. All right. Year two, year three. So it goes up. So hopefully the money you have over for every year will keep on adding up. And like I said, I'll help you with this one, yeah. This is more tricky, but I'll explain to you some more on Thursday. But so she started with 21,000, and she did a lot of good profit and loss. Was more profit than loss in the 3 years. So she ended up in $77,000 plus in year three. So she's doing good. Okay. All right. So that's it for the night. Now, the only homework you get to do is I need you to get a balance sheet for me by Thursday and a cash flow by Thursday. Don't forget, there's a big weekend coming up, you know. By Sunday, I want 50 business plans emailed to me. I know it's a joke.
Well, for us who ain't got no computer, you can print them. We come to your office and pick it up.
Nope. You gotta print it yourself, and then you can drop it by my office.
Suppose people ain't have access to a printer, no computer. That's what I'm saying.
Well, can you contact the private office?
All right then.
They'll help you, yeah. Because I don't know if being here, so you could actually
No problem.
yeah. So normally they'll help you with people who don't have no template. I mean, no type of ink or, but you can't. Well, you can't put it in your computer and email it to me.
Are you okay? So no, I can see because I'm see we have to download it. And,
Yeah.
I know. How would that work? Because some of them papers you can't type on the computer with the papers.
Yes.
And
The template what I emailed to you, you could once you
okay.
download it. Okay.
All right. Okay.
Download it to your computer.
Uh-huh.
Okay.
Okay, thanks.
And then all you gotta do is follow instructions, and then you email it back to me. People who have problems in download a computer, or you just click on the Microsoft Word and save it to your laptop. All right.
Okay, know that.
Yeah, let me show you. You see how it's working? Put in information. That's all you would do when you once you download it, load it to your computer. All right, let me just show you it now. Bring this up here.
I have no idea what you're doing.
All right, 1 second here. New share. New shares, new share. Everybody see the 9.0?
Ah,
Everybody see this? 9.0.
Yeah.
The financial plan. You see it?
Yes, yes,
Hello?
Yes,
Yes, sir.
yes.
yes.
Yes, we can see it.
Now, once you open the template, the fill-in template, all you gotta do is say, go to File, Save As. Make sure it's my documents, you're saving it under. This is financial plan model. Because I would have it in, I just put it one in. On your computer, you start filling out like this. You see? I keep on filling it out. Now, what you want to do now? People who have a difficulty now, it's very important. How I have this model set up is not what I call friendly for handwriting, right? So what you would have to do is call the office and ask them to assist you in getting the print off. Okay, and when you get a print off, what you want to do is write exactly what I have, but put it in your own words. So and what you would do is put it in a black book. All right, so get a black book. So draw the headings, just how headings is in the business plan template. And if you were to all the classes, you see I went through all of the areas, and all you gotta do now is put your information in the black book. You can handwrite it out, right? And then we'll move from there. Some people will not be advanced than others, but we don't leave anybody behind. So all of you all have children or not children, whatever, get a school book and start to fill it out. And then I'll assist you all at different levels, right? Because I like in all classes, some people don't have no technology. So what I want you to do for me, in the group, don't be shy, don't inbox me. In the group, tell me who needs a template so I can let the office know how much to print off. If you don't get an ink or whatever, you know, you just could get go to the office and get a printout. Now for people, now like I tell you now, you can't write on it in the template per se, because if you look at the template, you'll see where I want you to exchange red writing for black writing. So you just have to put that information in your book. So the template is only a guide, and you can look at your phone. You don't have to get a printout. You don't have to go to the office. Look at your phone. I'm going to WhatsApp you right now the business plan template PDF. So you look at your phone, and where I say black, I'll give you instructions. So you just get your black book, and don't get it from your children now. Get it by a whole brand new one, eh? Because you need all the pages. And just follow my example and put in the black book, and then when I see you, then we'll go over it. And let me know if you need one-on-one assistance next week. Not a problem. So anybody who need one-on-one assistance, that's the time. I'm helping one-on-one, but not now. Let's get certain things done, and this period is for your education. All right. So in closing, on Wednesday, no, what I'm going to do right now is going to email you. Well, all you're supposed to get a template, but I just email it to the phone. So you pull up in the phone right now, and then you just start writing out what I have there and what I want you to do. All right. Business plans are not easy. Some people ain't know what the heck they doing, even through training. But I try to make it as simple as possible. All right. So good night. And somebody just say prayers. And your homework is financial statement. I want an income statement and balance sheet for Thursday. You don't got to email it to me. Just have it ready because we closing and we have an open mic. I'm going to speak for about 15 minutes. God spend it on Thursday. Then you all speak for the other 45 minutes. I'm going to ask you all kind of questions in your income statement and balance sheet. That's the time to talk. Okay. And somebody say good night and bit of prayer.
No prayer warrior.
Heavenly Father, we want to thank you for our gathering tonight. Heavenly Father, we want to thank you, Father God, for this wisdom, this knowledge, and this understanding. We want to thank you right now for our lecture and thank you right now for everybody who attended as we go our separate ways, but not out of your presence. We thank you, Lord. Just we pray. Amen.
Okay. Good night in the name of the Father, Son, and Ghost.
Good night.
Amen.
Amen.
Amen. Good night.